The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge, folks. I absolutely love being here with you. I hope you had just simply a fantastic Labor Day weekend. You know, it is back to school. Those school bells should be going off around the country. Of course, down here in the South, kids have been back to school here for a few weeks or so. We're certainly going to take a tour around the markets. You can always give us a call at 877-927-6648. We can take a look at your stock, commodity, future, whatever it is that you'd like to look at, folks. And, you know, I had a great weekend. Great to be back with you. I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master. But mostly, folks, it is to provide you with the tools that will help you to lead an inspired life. Leading an inspired life, folks, that is something that you want to be able to achieve. That is what it's all about. So let's go take a look at one of our tools. This is the tool, folks, I call controlling what you can. This is an important tool. You know, in order to take our lives, folks, in order for you and for me, each of us to take our lives to another level, what we've got to realize is that the same pattern that has gotten us to where we are is likely not the same pattern that's going to get us to where it is that we need to go. Pretty simple concept, right? But difficult to change. Have you ever heard that expression? Maybe case in point here, and you probably have heard the expression. You know, if you get fooled once, what? Fooled once, maybe you say, okay, that's nice. You know, somebody fooled you. You'll remember it. But what happens if you get fooled twice? What is it that we say? We say, shame on you, you know, for going ahead and fooling us twice, Mr. Whoever or Mrs. Whoever out there. Now, what happens, folks, when you get fooled a third time? Absolutely, it's called shame on you. How many of us have been fooled a third, a fourth, a fifth time? And it's shame on us. Why? Because what we didn't do was we didn't change the pattern that got us to where it was that we were today. And that's what it's really all about. You've got to, if you're looking to get yourself to another level, doesn't matter how great life is, you're always looking to be able to expand. We talk about Fibonacci, expansion and contraction. You're either expanding or you're contracting out there. You don't want to continue to be fooled by life, by circumstances. In fact, what I really called by being fooled, folks, is just simply the circumstances in life, because, you see, you can't control external events. That's what I call circumstances. For the most part, you can't control external events. What you can control, though, is how you deal with those events, how you deal with circumstances. And, folks, what you want to do is you want to make changing, you know, your way of thinking. You want to make that a must in your life, because when you change your way of thinking, folks, what that's going to do, that is going to get you to your next level out there. So let's go take a look at the thinking in the marketplace. Let's go try to figure out this market right now. If we take a look around the world here, you've got everything in red. You've got the DAX down about 28 points, FTSE off 52, FTSE off almost a full percentage point right now. You've got the Nikkei was down just slightly last night. Of course, the Nikkei actually down big over the last several days. We'll take a look at that stock chart. They were down 8 points last night. The Shanghai making new lows again overnight, down 16 points, 0.75%. We know they're headed back to the 2008 lows, and if China's going to save us, folks, they haven't stepped in just yet. Hang Seng was off 129 points last night, off almost 0.7% out there. If we take a look at what's going on here, we've got the futures market, the Dow futures up 7 points. Basically, everything is flat. We're looking at the ES Mini on my chart here. If you're watching us on TigerTV, if not, and you're listening to us on the radio, thank you so much. Maybe you're listening to us on your mobile device because you've got TFNN.mobi bookmark there. You can always catch an archive of this show on Channel 9. If you take a look at the NASDAQ futures, down about 1.5%. Russell 2000 up 1%. King Dollar up 8 cents right now, traded out at 81.29. King Dollar having rejected a swing point out there, making 100% move of a move. We'll certainly take a look at that chart out there. Hi-Ho Silver, the biggest thing that is up on the board today, up 2.5%, up another 78 cents this morning, trading out at $32.23. You've got gold up $6, out at $16.93 out here. And so let's go take a look at our charts. Let's do the best that we can to take a look at our charts and see what's going on. You know, we had Uncle Ben's Wild Rice came out last week with his comments from Jackson Hole, and we talk about wild rice out here. Let me just update this chart because sometimes the wild rice was so wild it throws the chart off here. Talk about the reaction during the session from 10 to 10:30. Pretty wild in the ES Mini. Went from a high here, so if we just simply take a look at price spread, we went from a high of 14.08 all the way down to 13.97 in a matter of 30 minutes. Actually, I could put it on a shorter intraday time chart out here. And everything that folks were hoping for, whether it was the Bulls or the Bears, quite frankly, I think Uncle Ben disappointed everybody because everybody was waiting on that news out there. You basically, the response that we had here, even though, you had the S&P up 7 points, you had the Dow up 90 points. Of course, you've got to go back and take a look at what happened in the prior session. Really didn't, if you were just simply to have gone on vacation last week and you came back and you took a look at the weekly chart. In fact, we can do that. Let's just take this ES mini chart as an example. Let's just put this on the weekly chart out here. And what you would see is that the week of August 24th, you closed out at 1409.75. And if you took a look at last week, you closed out at 1405. 4-point difference there, folks. Yet it was a wild ride up and down and simply resolved nothing. Now, what you can see out here, this is the weekly chart, what you are beginning to see out here is you're beginning to see some lower highs out here. You're beginning to see lower highs in the Dow. You're beginning to see them in the S&P 500. What is this all about now? Well, I suppose everybody's going to wait on Mr. Draghi's comments coming out on Thursday. Then you've got the unemployment numbers coming out on Friday. So it looks like what we're talking about here is potentially another week of just simply wait around for the news. No fundamentals other than just waiting to see what happens with regard to monetary easing out there before anybody really pulls the trigger. Now, I expect today still to be a light volume day as folks in the Northeast. I don't believe school may not start until tomorrow out there. And so you've got folks still coming back from their vacations. But certainly, even though summer is not officially over, summer is almost officially over. Pretty amazing. Hopefully you had a great summer out there. Let's go back to the 30-minute chart here on the ES Mini. Just take a look at what it is that we can see pattern-wise out here. And what I'm going to do is just simply take a look at a trend line out here. And that trend line, folks, goes back to the high that was put in on August the 21st. On the ES Mini, it was 1423.50. You can go take a look at the SPYs, do the same thing. You can take a look at the S&P index. That would do the same thing as well there. Just going to try to adjust this microphone here. Okay. And so if we take a look at the trend line, just starting with the high out there, that was 1423.50. The next touch point, again, this is a trend line, not a channel line. Just take a look at the touch point, the high of August 30th when it was out at 1416 even. Now, what you can see for some reason, that trend line, folks, here, you broke out of it, you broke back below it. Right now, that area is what I am identifying as an area of support here right now. Each time the ES Mini trades down into that area, it gets rejected. If you get a close inside there, I suspect all that we're going to do here for a while. So, you don't have to strap on your seatbelt just yet. We're just simply going to have a continued sideways movement here. The lows that we're looking at are going to be on the ES Mini, going to be in about the 1395 range, and the highs maybe out in the 1412, 1410 level out here. We'll see if we can get this market to crack one way or the other, but it's certainly not going to be Europe that's handing off anything that's positive. If we're taking a look at the, everybody came out on Friday and was saying QE3, it's a done deal out there. Well, let me tell you, the market behavior out here is not behaving as if the QE3 was a done deal out here. What is QE1, QE2, QE3, QE4? What do they all do, folks? All they really do is just simply revalue assets. It's like playing the game of Monopoly out there. And instead of just having one game, all of a sudden in the middle of the game, going ahead and dumping more cash into it. You know how long it takes to play a game of Monopoly, folks? With just the normal bank that you've got there? Hours and hours and hours. Imagine if what you did was you just dumped more cash in there. That game would just simply be extended. In order to be able to get things on par, all you'd have to do is revalue assets. So instead of Park Place costing, I don't know, what does it cost for a Park Place? $550 or something like that? $450? $900 to buy it? Instead of $900, if you double the money supply, it's going to cost you $1,800. Nothing more than a revaluation of assets. We can go back and we can take a look at that. We can prove that. That's all that happens out there. But so far, you haven't seen that response as if there's going to be a revaluation of assets, as if QE3 is going to be the same as QE1 or QE2. It doesn't really matter. Let's not talk about Queen Elizabeth. Let's just look at the patterns that are out here. And so we can see here on the ES Mini, not really giving us a whole lot, not even really setting up any A to B equals CD ups or downs that I can point to you. So let's move on. Let's just go take a look at the daily charts out here. Let's see what the daily charts are showing. Probably the Dow futures, most important thing, the headline number out there. The Dow futures, instead of showing you a trend line, we're showing you channels. We're showing you rising price channel out here. That rising price channel touching the open out here on June the 5th on the Dow futures out at the price point of 12,064. The next two touch points out here, you can take a look at the candle from July 13th. The low is 12,500. You can take a look at the close on July 25th out at 12,637. That's really going to come into the open on July 26th as well. Out there, you can see that happened to have caught where the Dow futures closed on Friday out there. That is your bottom of your channel line. You can see right now the Dow struggling to get inside that area. What is holding it in place out here is this little bullish engulfing candle from August 24th. However, there was a close below that level. That close was on August 30th. I say that support is no longer there, folks. The Dow right now is communicating to us that it wants lower price. You take a look at the Dow here, the Dow futures, the Dow Jones Industrial Index, after it made that August 21st high out there, folks. What you do see are lower highs and lower lows in the Dow Jones. 877-927-6648. Give us a call, folks. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is. Folks, welcome back. 877-927-6648. So let's continue taking a look at the charts here. Let's go take a look at the currency charts. Let's try to figure out what's going on there. Let's start off with the king out here. Let's take a look at the U.S. dollar index trading up 8 pennies right now, out at 81.30. What did the U.S. dollar index do? Made a 100% move of a move, coming all the way back to the swing point from May 21st. That low was 81.03, 31,000 contracts. If you take a look at Wild Ride Friday, came down here with 13,000 contracts, got down to a low of $80.96, rejected that swing point on price and volume. King dollar trying to make a move higher. Of course, what is that all about? That's all about the queen, mostly all about the queen. If we take a look at the euro out here, we know the euro had formed several patterns out here. Number one, had that inverted head and shoulders. It is that neckline that is holding price in check, continues to be tested. You also have got a Gartley sell pattern, a .786 Gartley sell pattern. That pattern actually completed here on the 23rd of August. That area continues to be tested. That is holding, so you've got a Gartley sell pattern that is in place. There was a smaller butterfly sell pattern that was coming off of a swing point from August the 6th out there. So a number of patterns in place out here. If this area holds, this will set up the euro moving to the 1.29 level, not just make a 100% move of a move, which would be up at 127, but it'll go beyond that. Why? Because when you've got a failure, if you do have a failure like this at that .786 Gartley, that typically sets up a expansion. Now, when you're taking a look at the butterfly, or the actual butterfly patterns that this had, this was really at the lows, and I'll pull this back here. This is the daily chart we're looking at, but you had two butterfly patterns really that set up, one off of, and these were 1.618 butterfly patterns, one off of the swing point low from January 13, 2012, so it is going back really to the beginning of the year. That's when the euro had formed a low of 1.26229. And so you had, that was the bigger butterfly expansion. You also had a smaller one coming off of a swing point from June 1st out there when it made a low of 1.22866. So two butterflies, and if this area doesn't hold, that's why I say the 1.29 level would really be the next target on the euro. That should, if that's what occurs, put a little juice inside the markets here. But so far right now, no real juice. The markets are absolutely flat with the exception of Europe. So let's go take a look and see what's going on over in Europe and around the world. Let's start off with the DAX. Let's see if that's the, so we got the DAX out here. The DAX, give me a moment here. Making a high. The high in the DAX right now is August 21st. Really the highs as we take a look at all the markets. It's why there's synergy and why you want to understand what's going on inside these markets. The DAX got up to a high of 71.05. You're trading out right now at 69.83. The DAX here, again, doing nothing more than really just simply moving sideways here. So no joy in the DAX. You can certainly see that it has been on a, in a rising price channel. However, what has stopped it is the test of the swing point that comes back to March 27th. If you take a look at our markets as well, you'll see March 27th inside the S&P 500 as a swing point that has been tested out there. You know, I would have thought that the DAX would really try to get up into the March 16th level. The low of that is 71.94. The high there, 71.42. Hasn't been able to make its way up there. The DAX trading towards its session lows. If we go take a look at the FTSE down almost a full percentage point this morning. So the FTSE showing that it wants to move all the way back, looks like to a trend line. That trend line coming off of the low from June 4th. So similar to the trend line that you could draw on our S&P 500, on our Dow, and what you'll see here is that the FTSE is weaker in essence than our markets, but it is headed back towards this trend line. That also would really be the 0.618 retracement off of its most recent swing point low to high. That swing point low coming in on July 25th out at 54.78, and the high coming in on none other than August. Well, in this case here, August the 14th out there. The FTSE saying that it absolutely does want lower price out here, has not even formed really an A to B equals CD down. This has just been pretty much a straight line move if we take a look at the FTSE. So all is not okay over in London town. Of course, the Nikkei, I mentioned the Nikkei down as well, trading out at 87.75. And you can see the Nikkei. Let's go ahead and erase some of the patterns that are out there. Let's take a look at the retracement thus far. That retracement coming off of its most recent swing point low on July 25th, all the way up to the high established on August 20th. The Nikkei wants lower price, folks. The next stop on the Nikkei, 86.69. I suspect 85.19 is where she wants to trade to. 877-927-6648. We get back, we'll go hear the opening bell, see what these markets are going to do. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. You got the Dow off 16 points. S&P's off 1 point, maybe. Composite off 13 cents. Basically a quiet market out there, folks. Microsoft down 33 cents. Intel totally flat. Google off 34 cents. Cisco off 9 pennies. Apple up $4 and change. We'll take a look at the Apple chart here in a moment. Pop into the upside. You've got Medicus Pharmaceuticals. MRX is the ticker symbol there. Up 37%. I believe that is on a acquisition. They're being acquired. Let's see. Valiant Pharmaceuticals International agrees to acquire Medicus, so that is a nice 37% premium, up $11 and change. Valiant also up this morning, up $6 and change, so up 12% out there. We'll take a look at those two stock charts. You got Medivation, MDVN Inc. They're up 5% here this morning. You've got Questcor Pharmaceuticals, so the pharmaceutical companies here moving up 13% this morning. Melanex Technologies up 3.5%. Baidu up 2%. Anheuser-Busch, this bud is for you, up 2%, 2.5% here this morning. Leading things to the downside, Netflix. Netflix down 6% this morning, trading off $3 and change. Walter Energy, WLT, is that ticker symbol, off 4%. That is down $1.20. ARM Holdings, ARMH, is the ticker symbol. They're off 4% this morning. Norfolk Southern and Caterpillar, Lindell, Basel, LYB, I believe they were the ones that were added into the S&P 500. They're trading down 2% this morning. Again, our call number 877-927-6648. As we go take a look at the Apple chart out here, Apple trading out right now at $669.70. Apple made a 1.272 butterfly pattern here. That butterfly was made as Apple was gapping up on August the 27th. You know, as you make your D point here, which in essence what Apple was doing, and you gap up into it, you got to be careful. You know, it looks to me like that area will be tested. If that area holds, it says that Apple wants to go ahead and pull back. The pullback, just a normal pullback on Apple, would be your A point, which would be down at the low of May 18th. That's out at 528.66, all the way up to the gap high on August 27th. That gap has been filled out there. Just a normal retracement would take Apple down to the 586 level. 622 would be nothing more than a dead cat bounce. If we take a look at Apple on the way down, you had some decent volume. I don't know if I can even call it decent volume on Friday. You did 13 million shares. That 13 million shares really pushing into 21 million shares, so let's not call that decent volume on the way down. I would expect Apple to at least tag that August 27th level. 673 is the low, 680 is the high. You're at 669. It won't take anything to get up and tag that area. Only 15 million shares up there as well. Let's go take a look at these two buyout or merged candidates. Medicus Pharmaceuticals, MDX is their ticker symbol. So let's go see what kind of premium is out there. Trading out right now at $43. Do I got the right ticker symbol? MRX. MDX was not the right ticker symbol out there. So MRX, no wonder that didn't look right. MRX is the ticker symbol, trading up right now at $34. Do I have that right? $43. Okay. Looks like we're having a little data feed problem. Nothing like coming back from a holiday, having a little data feed problem out here. Oh, this could make things interesting. No, I got to type in the right symbol. Say, Steve, it's not the charts, it's my fingers. Apparently, I have fat finger problem here this morning. Let's try this one more time. Third time is a charm. MRX is the ticker symbol. There we go. You got some nice volume in this thing. But let's just go see what this was going back to. We're going to go ahead and put this on a monthly chart and see what we have here. So this is getting up over the all-time highs. All shareholders in this equity here are in the green. That is a beautiful thing. The high on this was in November 2006 out at $40.31. Of course, this thing moved all the way down into November 2008, down at a price point of $9.66 out there. Let's go take a look at Valiant Pharmaceuticals. They are the acquirer. VRX is the ticker symbol. Let's see if I can get these fingers here to work properly. VRX, they too gap up this morning, and they've got volume behind the move. So that is a fairly good positive. Now, this is coming right down into a downdraft. Kind of interesting. It's going to try to take out that day. The downdraft that came in, that is a bearish of bearish engulfings. That was on April 3rd, 2012. So you get a close above that. And this thing, from a momentum move, folks, wants to move higher. So actually, if you are a momentum trader in the pharmaceutical, let's put this back on a longer-term chart here, and let's take a look at this. So it's trying to get above its highs. So if you take a look at that downdraft occurring August, so you get two downdrafts out here, but the August 31st, 2011 downdraft, folks, on the monthly chart had 103 million shares. We're off to a new month. You're up over now the actual area of resistance, because this was a monthly bearish engulfing candle, would have been July 31st's high. That high of $57.24. You're at $58.40. So this actually, if you were a momentum trader here, and especially if this closes above $57.24, this would be one of those stocks that you would actually look at playing out there, and you would use a stop, a close below $57.24. If you take a look at the most recent high, which was May 31st, 2012, that high would be $57.30. So I'd still use $57.24 as a place where I would close out the momentum trade. That is on Valiant Pharmaceuticals out there. Let's go take a look at Netflix. Let's go see what she is doing out here. NFLX is the ticker symbol. Gapping down this morning, and this stock chart here still looks absolutely horrible. Amazing, folks. You got to always know what business you're in, because if you don't, you will be going out of business faster than you can say Netflix out here. Netflix now taking on the swing point low. Its most recent one is August 3rd. That has 5.3 million shares. So far this morning, in the first 11 minutes of trading, you've done 1.3 million. So 1.3 going against 5.3. It's going to have no problem today, volume-wise, trying to take out that swing point low, which is 52.81. You're at 54.25 out here. Let's put this now on a weekly chart. Probably need a weekly and a monthly just to try to get a feel for where Netflix is going all the way back. Let's go ahead and put this on a weekly chart. This stock is never going to get back to its highs out here. No way. Let's go take a look at the monthly chart out there, which is really a shame, folks, because there are probably some people out there that are holding Netflix today, and they're in at the $305 price point. It's not going back there. If we take a look at their whole business, unless they totally change their business model, Netflix here really just simply going to be coming back all the way into the $18 level back in the November time frame here. It just simply wants to bust out this low. On the last week, the low on this was 52.81. It's at 53.95. Doesn't have that much further to go. That is on Netflix. Let's go take a look at Caterpillar. Caterpillar off 2% this morning. Let's go see what the big cat has in store for us. I believe Caterpillar is on a long-term sell mode, and what I mean by that, folks, if we put Caterpillar, if I put the monthly chart up here, it might actually pop up on the screen. It most certainly does. Caterpillar gave you the long-term sell signal going back to April 30th, 2012. That's when the converted folks, the converted monthly version of the 50-day and 200-day moving average. You had a crosser, you had a death cross. So make sure if you're using moving averages on your charts here, and you just simply put up a 10-day, 10-week, 50-day, all it's really doing on a 50-day, for most of them, are just simply going back 50 candles. So if you're trying to use a 50-day on a monthly chart, make sure you make that conversion for monthly versus daily. Otherwise, you're getting a 50-month and a 200-month exponential moving average there. So you want to make sure you're doing that with any of the lagging moving average indicators that you have out there. If we take a look at Caterpillar wants to get down and test the low from October 31st on the monthly basis. Once you get down there, and that's at the 67.54 level, you're at $83 and change. Let's go see what the weekly chart on Caterpillar has for us. First, what it's got to do, it's got to bust out the most recent swing point. Let me just update this, make sure I've got the proper volumes here. So if we take a look at the last bullish engulfing candle, that's going to be from the month or the week of July 27th. It engulfed two prior sessions at least, and that sets up your support area, the candle of July 13th. That low is 78.25. 78.25 gets taken out, folks, then what it's going to do, the next area is going to be October of 2011, October 4th here. That would be 67.54. But I suspect that what Caterpillar could easily be doing here, it's either going to set up a consolidation range, the consolidation area being from 116 down to the lows of $67, or if it busts that area out, what it really wants to do is come back and test this high volume bar from July 24th, 2009 on Caterpillar. That's less than the $60. That's out at $42 and change. That's on Caterpillar. Let's go take a look at Google, see what Google is doing. She is trading down about $5 right now, out at 680. GOOG is the ticker symbol here. That doesn't look like anything great. Now, Google, I haven't looked at the weekly chart, but we're going to do that while we're on the air here, because Google was taking out highs. So let's go take a look at the weekly chart. Let's go see what she did last week. Volume-wise, last week was 11 million shares as it took out that island reversal shooting star candle that had 12.5 million shares from January 6th out there. The high of that candle is 649.79. You don't want to see Google get back inside that. If it gets back inside that area, what it could be doing. Let's go see what else is keeping this thing in check here. But if it gets back inside that area, folks, all it will do is try to run back down towards the lows out at 557, the 557 mark. Now I'm going to go ahead and put this on a monthly chart. Let's go take a look at Google on the month, see what this is doing. Trying to get, so the all-time high here on Google goes back to November 2007. It is trading inside that candle, 747.24, 171 million shares out there. However, last month he came into with 47 million shares. Talk about being light on volume, folks. Google's going to need a little rocket fuel in order to be able to get up and try to tag those highs. If it does get up there and it does it on lighter volume, you're making a 100% move of a move. Unlike Walmart, that took out its highs. In fact, speaking of Walmart, let's go see how she actually ended the month. Last month out here, let's put Walmart up there, because I didn't take a look at that over the extended weekend, but we're going to do it right here on Tiger TV. We're looking at the monthly chart of Walmart. Why? Because Walmart had taken out its all-time highs going back to the 2009 time frame. That 2009, December 31st, 2009, folks, that had volume of 137 million shares. As it came through there, it came through at 210. That's how you want to take out a swing point. That is with accelerated volume. If you're taking a look at an equity that pays a decent dividend here, what you'd like to do, you'd like to buy Walmart if it comes back and tests that December 31st, 1999 level, $70.25. You're at 73.22 right now. So let's go take a look at the daily chart, see if that is any pattern, if that's even feasible here. What Walmart did do is all last week, so on the daily chart, all last week it traded inside the July 19th candle. The low out there was 70.23. Let me go back. What was that number that we had on the monthly chart? I think it was 70.25. So 70.25. So 70.23 was certainly your one of your opportunities to get in on Walmart. if it stays inside this candle, so today it's trying to break outside of that July 19th area, the high of 72.86, you're at 73.26. And what you're going to want to watch, there was a gap down here with some good volume. That occurred on August 16th. So right now, all that Walmart is trying to do is close that gap. The bottom of that gap is August 15th, 73.82. The volume there is 7.7 million shares. So far today, 692,000 shares. So watch how Walmart comes into that gap. If it comes in with lighter volume, it should pull back. And what you'd want to do from your long-term holding standpoint, you want to take a look at maybe adding Walmart to your portfolio as it comes back to that area. If Walmart ever does come back inside the range, meaning back inside that 70.25 level, that might be that's where you'd be placing your stop. Would be a close back inside there. Again, this would be a longer term holding out there. That is on Walmart. If we go take a look at let's go take a look at just simply the ETF indices out here. You've got the Dow off 28 points right now. Let's go see what the Dow is doing. Let's go see what the diamonds are doing specifically. If we take a look at the diamonds here, the diamonds last Friday having some volume, did 5.4 million shares. What the diamonds were moving into was the swing point high that goes back to May 1st. So May Day 2012, what the diamonds did was 5.5 million shares. So you had 5.5 million shares. What you did on Friday was you got up there with 5.5 million shares. So you came in with the same volume. You rejected that swing point on price. You didn't really reject it on volume out there. What you can see, though, the diamonds are the weak link out there. The diamonds actually wanting to make an A to B equals CD down. That's going to take it to nothing more than the dead cat bounce. Folks, that is nothing more than the lows of June 4th out there on the diamonds at 120.19, all the way up to the high that was put in on August 21st. 877-927-6648. Give us a call, folks. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. The Dow off 20 points right now. S&P's off 1. Composite off a couple of points. And around Europe, the DAX not liking the open here of the U.S. market. The DAX now down towards its session lows, off 54 points. The FTSE still down now over 1%, 1 1/10%. Let's go up to Lexington, Massachusetts. Lexington, Massachusetts. Frank, thanks for calling. Thanks for holding. How are you today?
You're welcome. I'm fine. Thank you.
Great. How was your weekend?
Oh, nice. Nice and long.
You guys have a good weather weekend up in the Northeast?
The weather was excellent.
Oh, good. Did you
it's
do it?
pouring today. We've got hurricane remnants, but that's okay. We need a little rain.
Okay, so Isaac is making its way up there.
Yeah, but he's not what he used to be.
Okay, all right, good, good. Well, that's good. Get a little rain in there. It's great that he held out for your weekend.
Absolutely.
So you wanted to take a look at Molly Corp. MCP is a ticker symbol. Tell me what you're doing and how I can help you.
Well, it looks to me like it's trying to make a bottom here on a volume basis. And it did gap down back at the beginning of August.
Yes.
But the volume that it gapped down with is pretty low compared to the volume it has been running up with in the last week or two.
Yes.
What do you think about a buy right here?
Okay, so if we take a look at Molycorp, and I like everything that you're looking at, and folks, the first thing that Frank talked about was the gap down on August 3rd. So August 3rd, it gaps down with 21 million shares. It actually gapped down again. This was the gap that is even more dangerous when it was making a low on August 17th with 34 million shares out there. Not an exhaustion gap. I wish that there was a third gap down on Molycorp to give you perhaps an exhaustion gap at the bottom here. You are taking a look at some moves up here with 18 million shares on the 28th, the 29th, 23 million shares. However, the 30th there, 22 million shares. I was making this little bearish engulfing candle. What you want to do is be patient with this. See how this handles the resistance area of that gap from August the 3rd. That high, which is $13.49, that hasn't been tested. You want to see that. What you want to do is you want to see that area fail. If that area holds, what that really says is this wants to get back, to the lows out there. And the lows would be, August 27th at $9.40. So I would, because if you take a look at what your potential is, it's going to be that resistance area, that open window, and it's just fall. Sometimes people like to leave those windows open. And so in this case here, that could act as your resistance area, and this would not be the best time to step in because it looks to me like right now your maximum potential is $13.49, and you're at $12, and this could easily go down and should go down and test that $9.40 level. If you put this on you picked up on it. What this did do is this made a extraordinary high volume low on the monthly basis, 234 million shares as it got down to $9.40. That really says on the monthly chart that you're going to want to see that area get tested. The weekly chart as well, you had big volume. And here's the other thing. If you go back to this stock chart, what's interesting, Frank, if you go back to its IPO week of July 30th, the low out there was 1210. Some people actually still have that stock from back there, and it hasn't gotten above that level. So I would be patient if I were you.
That makes sense. I see on the monthly chart what you're saying.
Yeah, so it should go down there and test it and give you a better reward to risk option to get into it, okay?
Yeah, okay. Sometimes on these IPOs, though, the volume, you'll get a high volume low like this, and it's really a volume climax.
Well, if there were any institutions, they cleared house last month. All righty. Thanks, Frank. You bet. Thanks for listening. Have a great day. Folks, thanks for being here. Stay tuned. Tom and I will be up next if you're starting your day. Have a great Tuesday, and I look forward to seeing you tomorrow morning. Bye-bye now.
Well, it's always better when we're together. Yeah, it's always